All right, a bit of relief for homeowners after the Bank of Canada's 25 basis point cut yesterday, especially welcome from the 60% of mortgage holders and mortgages that are up for renewals next year. So let's talk more about this live now with Leah Zlatkin, an expert at lowestrates.ca and also a licensed mortgage broker, someone we frequently turn to on the days after a Bank of Canada rate decision. So Leah, good to talk to you this morning. 25 basis points yesterday drop. We kind of saw that coming, but the potential is, Leah, there could be more cuts on the way as well. What could that mean to how people look at their mortgages?
Yeah, so for anybody who's currently got a variable rate mortgage, this probably does come as a bit of a sigh of relief. The last 3 consecutive announcements have been holds, and this is the first time since March where we're actually seeing a decrease. So it is a bit of a respite for those who do have variable rates. In terms of future predictions for a decrease, right now the Bank of Canada has been less than forthcoming with information in regards to whether they will have another drop coming up soon, but it's still yet to be determined.
Now, Leah, with this, down to 2.5% now for the overnight rate from the Bank of Canada, is that a sort of area or range where people might be considering maybe now's the time to get into variable? They appear to, they came down yesterday. Like you said, the future is a bit unclear, but is this more appealing for potentially turning to variable rather than fixed?
Well, fixed and variable rates are very comparable right now. So when you look at high ratio mortgages, you're seeing both around a 3.99 on a high ratio fixed product, and you're also seeing something around 3.95 on a variable product. So they're quite comparable, and so that makes it more easy for somebody to decide to go variable as opposed to go fixed. This being said, it's a bit of a wager whether you believe that it's actually going to continue coming down or not. If you do believe that that discount's going to continue coming down with more Bank of Canada announcements, then variable is absolutely a safe bet for you.
Leah, the other thing that's interesting about this is if, and we say if because we don't know for certain, that if the bank does decide to lower rates again by another 25, maybe even 50 points by the end of the year, who knows for sure. For some people, they might look at that and think, okay, that's potentially cheaper money ahead, but you could end up paying more in the long run, couldn't you? Because as the money drops, prices of houses generally goes up, doesn't it?
Yeah, absolutely. And that's one of those things that is that seesaw effect. As the rates go down, the prices of houses go up. If you are poised to get into the market right now, I certainly do recommend. There's a lot of inventory in the marketplace. If you're poised and ready to buy and you're a qualified buyer, certainly right now gives you an opportunity to get into the market with some bargaining power. And if those rates do continue to go down, then obviously prices of homes do typically start to go up in the cities.
Yeah, it's interestingly, we've had a lot of real estate experts on the show saying that lately, based on the numbers and data, that this does appear to be a buyer's market. So this would appear to be a bit of a sweet spot in terms of where the borrowing rates are and where the potential price of a home or condo or whatever is.
Yeah, for well-qualified buyers, there's no better time than now to get into the market. You certainly have a lot of bargaining power if you're working with a strong realtor. And certainly, I do think it's the right time to start looking if you were previously considering buying something. This being said, if you're not ready to get into the market, you shouldn't be pushing yourself just because of rates. It's sort of an artificial, factor there when you look at how much the difference in rate is really going to impact your monthly nut.
You just said something interesting. Well-qualified buyers, Leah. Could you just sort of expand on that a little bit in terms, some people may not be so well-qualified. How does that change the game?
Yeah, if you've got a solid, steady income and you're able to afford a home, you've been pre-approved by a bank or by a mortgage broker, certainly it's a great time to get into the market. We have seen record unemployment. Unemployment is on the rise right now. If you are worried about job security in any kind of way, it's probably not a great time to buy a house. And so you want to make sure that you're comfortable in your career, you're comfortable with your income before making a housing decision.
Okay, that is Leah Zlatkin, an expert from lowestrates.ca, also a licensed mortgage broker. Leah, I appreciate the time this morning. Thanks for joining us here to talk about this. A lot of people, am I going to get in? Am I not? We'll see. Thank you so much for this.
Thank you.